Everyone's worried about raising money in this economy. I know there's a ton of venture capitalists and angel investors out there that are dying to invest, but it's often hard for little up-and-comers to get in front of these guys.
No, that's so true. I mean, the venture capitalists don't invest in the small businesses of our country, and that's 28 million small businesses that we have that probably aren't appropriate for venture capital. And the banks have been really tough on the small businesses, and this week is not going to make it any easier for them when we have a stock market that is sponsored by Six Flags Great America.
Yeah, no joke. Okay, so what are some things that people could do? Look, everybody needs money. Everybody's got to pay the bills. It's even hard to get short-term loans these days for these small guys. So what are some things they could do?
Yeah, so I think that when you're a small business owner, it's so hard to manage your cash. And so you have to sort of turn into almost like MacGyver or James Bond and say, what's a really creative way for me to infuse cash into my business in the short term? And the first thing, Tracy, that they can do is that they can sell first. Because so many business owners really make their products and then try and push them out into the market. Or even service providers, they'll do the work and then they'll spend so many hours chasing down those payments. So the key is you want to get paid as quickly as possible. So that may mean asking for some of the payment up front. That may mean selling the product first and then going out and producing it once you know that there's a market demand so that you can conserve the cash in your business.
That's interesting because, now you're talking about your account receivable, right? Like, don't give them 30, 60 days to pay the bill. You're saying ask for it up front. For a while, I thought there was a little bit of movement to extend that time to pay just to get the sale. But you're saying that's not the way to go.
Well, I'm saying it depends on the value of your time. If you want to spend all of your time chasing these folks down, a lot of whom do not have the cash to pay you and they're going to keep pushing you off and pushing you off, then it's not really work. It's not really revenue. If you're not getting paid for it, that's charity. So if you want to increase the cash in your business, you're going to have to change up your policies a little bit and practice what I like to call cash flow yoga, which is the cash in quickly and the cash out slowly, Tracy.
Yeah, I'm with you. I like the notion of gift cards.
Yeah, retailers have known that this is a great strategy for years, but I don't think that other companies really think I can go and do a gift card or a gift certificate. If you're an accountant, use it as an opportunity to give a discount and to get that money in early. So say, hey, plan ahead for your taxes, buy the gift card now, and, you can get a 20% discount. And people are looking for deals, and you would be amazed the types of businesses that are able to sell gift cards and gift certificates. The only thing that you have to be careful about there is that there are different legal regulations in every state and jurisdiction. So you have to check to see what makes sense for your business and what the laws are. And then the other thing is you cannot book that as revenue. That is a liability on your balance sheet, and you eventually do have to deliver the products or the services. So it's a good way to get that short-term cash in to help you through the cash crunch. But do remember that eventually you're going to have to get those redeemed.
That's a great point, actually, because that was part of the reason why there was all these rules and fines connected to gift cards, because the vendor wanted people to go out and spend it. Thankfully, though, the rules have been changed, so for people like me who receive them, I have a lot more time to use them. But you're right, the business has to be aware they have to wait until I come in and actually use that card to book that revenue. Talk about crowdfunding.
Yeah, so crowdfunding is something that's emerged, Web 2.0 strategy, and there are these great platforms. One of the most successful ones is Kickstarter at Kickstarter.com. And it's sort of like selling first in a sense, but you're really getting feedback for your idea, and you're finding peers and members of these sites that will sponsor a project. So let's say, for example, you have an information project that you want to do. Well, you can put it out there, and then you can set up levels of sponsorship. So they're not actually loaning money or investing in your business, but they're really sponsoring your project, almost like a patron of the arts, if you will.
Oh, that's
and you can
cool.
set it up at It is, and you can set up these different levels. So you can say for $100, we'll give you a copy of the product when it's ready. But hey, if you're willing to put in $500, we'll actually put your name in the back of the CD case or something like that. So you can have a lot of fun having the different incentives for the people to sponsor it. And the caveat there is that, you have to raise the money. If the people aren't interested, well, then your project doesn't get funded. But there have been a lot of projects that have been really, really successful, and it's a great way to try and creatively get cash into your business.
Now, some of the other things you say are sponsors and vendors, cut back on expenses, which is logical too. I love your final tip, though. There's always friends, families, and fools, or better yet, doctors, dentists, and lawyers. Basically, you're talking about people you know with money.
Yeah, somebody who knows you, who likes you, who might have a little cash lying around. And the FFFs, the friends, families, and fools, were the way to go in the past, but now we call them DDLs, doctors, dentists, and lawyers. And, when the banks are tight, who's the likely person who's going to lend to you? It's somebody who knows you and believes in you and thinks that you're going to be successful in your business. So you can approach them in the form of a loan, in the form of equity in your business. But again, caveats there, because there are legal ramifications about raising capital, so you have to make sure you're doing it in a legal way.
Sure.
And then you also want to make sure you never take money from somebody who can't afford to repay it at the end of the day, who can afford to lose it. And and finally, you're changing the professional relationship into a personal one.
Well, and I think that's
that's
the most important point, right? If you're taking Aunt Millie's money and you lose it, she's going to be really, really mad at you. Carol, we love having you on. CarolRoth.com. Check it out. Check out her book. Come back with more great ideas.